Let's take a look at the prospects for Asian markets, and in particular Japan's struggle with a rising yen, deepening deflation and slowing growth. We're joined from Tokyo by John Vail, Chief Global Strategist at Nikko Asset Management. John, hello. Thanks for joining us today.
Good morning.
John, it's been quite a week for Japan, hasn't it, with the Bank of Japan announcing its extension of its bank lending program. The government's going to pump another 900 billion yen into the economy. And, of course, we've got the political shenanigans, Khan versus Ozawa. Amidst all this, John, is this the time to be investing in Japanese equities?
Well, certainly the valuations are extremely cheap in Japan, just like they are in most of the developed markets. You've got Japan on about 13, 14 times this year's earnings. And certainly Japan is going to move with the global cycle. It has for many years. In fact, many people think that Japanese stocks are very boring and very poor performers, but they tend to only look in local currency terms. If you measure in constant currency terms, like using the US dollar, they've actually done quite decently against other developed markets. In fact, they've outperformed over certain periods as well. So they're not to be ignored. And if you like equities, global equities, you should have some money in Japan as well.
Which sort of sectors, which industries, John, then, do you think are the most appealing right now within Japan?
Well, in valuation terms, we've got autos very inexpensive as a sector, and that's certainly one area where Japan excels in terms of their global presence. The financial sector is certainly very inexpensive with high dividend yields. Many of the banks are not that exciting, but neither are they in trouble like some banks in the other developed countries.
A lot's been made, of course, John, about the strengthening yen and its impact on exporters in particular. I mean, are you suggesting that those concerns are overdone?
Well, no, it does. It certainly does hurt. I'm not of the opinion that the yen is going to get much stronger. I think it's come to the point now where the macroeconomic statistics in Japan are going to show that it's weakening due to the strong yen, and that's going to take some of the pressure off the yen. We've also got, like you mentioned before, a political situation. It's not just the fact that Ozawa perhaps would, if he was elected, would do a great deal more fiscal stimulus, which would tend to weaken the yen. But also there's a movement afoot within the Japanese Congress to take away some of the BOJ's independence by forcing upon it a similar law to the Bank of England law, whereby the Bank of England has to have an inflation target, and if it misses it, it has to report to Congress or the Parliament as to why it's missed it. So there'll be a lot more pressure on the Bank of Japan to put more money into the system to prevent deflation if this sort of law becomes reality.
Which has worked well here in the UK, you know, splitting off the Bank of England but making it accountable to the government. I mean, do you think such a system would work in Japan?
Well, it's not impossible. Certainly the Bank of Japan would not like that, but it's certainly possible it could work in Japan.
OK, John, we'll leave it there. Thanks very much for joining us today. John Vail there from Nikko Asset Management.